My first guest says we are still in the midst of a global recession. Make no mistake about it, but that the worst may be behind us. Kate Schapiro manages the Sentinel International Equity Fund. It's a core international portfolio focused on developed markets. She's also the senior vice president and portfolio manager at Sentinel Asset Management. Kate Schapiro, good to have you with us. Thanks for coming in.
Thanks for having me.
This first thesis, sort of strange when you look at it from an equity point of view, because the stock market has really rebounded from those March lows. But you say, pay attention, we're still really in a global recession, right?
Absolutely. I mean, we talk about green shoots, and even to the rest of the world, the U.S. is critical. The U.S. is still 30% of the world's GDP. So what happens in the U.S. is absolutely critical to the rest of the year. Absolutely. There is no true decoupling from that point of view. And while we are having green shoots, I think that we're still a long way away from true steady growth phase.
All right, so if we're still a ways away from this steady growth phase, you want to focus a little bit on what's going on in China, because there might be, if not a decoupling, at least a sort of step, not in a step-by-step progression. They're not following us, we're not following them. They're on a little bit of a different trajectory. Tell us about it.
Well, the difference is that China does have resources. We're, of course, having to borrow a lot of money to fund our programs for growth. They have their money that they can spend internally. They have a lot of work to do on infrastructure. They don't have consumption problem. In fact, they need to help stimulate consumption within their own country. So there's work that they can do internally to help their country grow. Having said that, they absolutely need their export sector to produce the double-digit kind of growth that they've had over the last several years.
Because why? Because it's not so easy to just reorient an entire economy to now being for domestic consumption, whereas it's been built on this export prowess.
Right. Well, so they're moving from the point where they were really the manufacturing center to the world, and now they have to develop their own internal machinations, if you will. But it takes time, and it's a different culture, and they're actually at different stages. I mean, Beijing, Shanghai, those are practically developed market areas. But of course, as you move into the interior, it's still very underdeveloped.
All right. Now, one of the areas of development I know that you've been paying attention to has to do with the kinds of services, the kinds of products that perhaps in the developed world we take for granted, such as insurance,
Correct.
right? I mean, just a basic kind of insurance policy. What's the company and what's the status of insurance, let's say, in China?
Well, one of our core holdings is China Life, and it was a stock that certainly when things were getting hit back last fall, we were adding to, and it's done extremely well over the last 6-9 months. The reason we like insurance in China is that today, really only 2% market penetration has occurred. And what they found is in the past, when incomes start going over about $3,500 a year, I mean, it sounds really small, right? But then all of a sudden, people start thinking about savings, retirement, and they can begin to afford it. It becomes a kind of savings plan for them. And so China has crossed that threshold, and certainly in some areas, so it can become a growth industry for China. Certainly we expect to go from, say, 2% penetration to maybe 10 to 15% over the next 10 years. So that could provide some great growth.
Would you be adding new money to the Chinese theme right now?
China's had a phenomenal move. It's been one of the best performing markets of this year, and actually it bottomed last October and has really been one of the leading markets coming out of the depths last fall. So I think prices are a bit high, even China Life. I mean, from a short-term valuation point of view, it looks a little full. But we like to invest for the long run, and we still think that in the long run you're going to make money.
All right, so maybe not right now, but put that on your list of things to watch and see whether it pulls back a little bit.
Yeah, 10% and be fine.
All right, we're going to continue the conversation more with Kate Schapiro, including why she is bullish on a German company that specializes in dialysis treatment. Kate Schapiro, can you give us an insight into what else in Asia? Because I know that Samsung is another company that you're following right now. Why is Samsung? Is this also a bet on what's going on in China? They're going to spend that stimulus money on electronics.
Well, they are. I mean, part of the stimulus package in China is to get consumers to buy. They're not overburdened with credit the way we are. Our consumers are here. And certainly when they do buy, what do they buy? They buy cell phones, they buy televisions, they buy computers. And Samsung is a leader in all those areas. And it's a very big brand in Asia, without question. It's sort of the new Sony. This is not your father's Sony kind of thing.
No, but when you look at Samsung, just to push it a little bit, I mean, is there a possibility that the Chinese domestic consumption, they'll be turning to Chinese companies in order to fulfill all these demands? Does Samsung have some kind of into the Chinese market that we should know about?
Not necessarily, but as a major brand, I mean, the Chinese still like their brands, and you're absolutely right. When looking at consumption ideas in China, we do like to look at Chinese companies for Chinese consumption, because it's not all going to be about bringing in the global brands.
Right. That's why you got China Life, for example, for life insurance.
Exactly. But we do like Samsung from another point of view. It's not just about the China story. It's really also about technology. You mentioned about technology having done well recently. We do see that technology is an industry that's lived with deflation for a long time. You know, that's been a big part of the discussion these days. Are we going to have inflation again? Are we in prices decreasing? And technology companies have had to live with this, of prices coming down and having to be more and more efficient. So Samsung is one of those companies that deals with the prices of their products going down all the time. They have to come out with better and more efficient, and they've been great at it.
All right. Well, let me push you a little bit, because we talk about electronics, we talk about mobile technology, right, Samsung, and so on. Can you tie that together? I'm looking for the segue that would bring us to Telefonica, because this is a big telecoms operator. But you're saying pay attention to what they're doing in Latin America, which is the real growing market for them.
Right. Well, there's two ways to think about Telefonica that's somewhat similar to a Samsung. It's a bit different in the sense that Telefonica as a telephone utility operator is really more of a defensive type of company. You and I were talking earlier. There was a time when this was a major growth company. It was growing 40%, 50%, had to own it. It's not like that anymore. It's more like a utility. It's very steady growth. We're looking at kind of a 10% type of growth rate, 7% yield, strong balance sheet. The growth side of the business is certainly Latin America. They have 40% of the Brazilian market, for example. And so that gives it the little growth edge. But in the long sense, it's still more of a steady Eddie kind of growth story, and it's selling at about 10 times earnings. So it looks good. It's not going to be the barn burner, but it's the nice offset to the more high beta type of ideas like a China Life or a Samsung.
When you put together the portfolio, I'm just curious, do you really go through that process where you say, okay, look, if we were going to go and participate and go long some China Life because we believe that story, right, do you then go and say, we've got to look for something else that is going to provide that kind of annuity-like stream in order to play defense if indeed something happens in a China Life?
Absolutely. I mean, I think, and we're in that kind of market. We started our discussion talking about that we're still in a recession. It's a global recession. It's going to take some time. Even though China's looking at 8% or 9% growth this year, it's still not big enough to bring the whole world with it. So we want to balance the portfolio between high beta, sort of aggressive ideas that are based on growth estimates, as well as stocks that are more defensive in qualities that you can feel comfortable with, and as I like to say, sleep at night.
All right, so we talked about China Life. You got Samsung. You also mentioned Telefonica as being more defensive a little bit. What about this company that I know you want to talk about, Fresenius? This is based in Germany, dialysis equipment.
Well, dialysis services and equipment is only part of their business. There's a separate company called Fresenius Medical Care that has dialysis services in the United States as well as elsewhere in the world, but that's only part of their business. They're also involved in hospital management, in privatizing hospitals in Germany. So you take government-run hospitals and then you make them more efficient, and that's a good, steady cash flow business. It's not high growth, but steady. They also have businesses where they do intravenous nutritional products. So if you're in the hospital and they have to shoot you full of vitamins, saline solution, that's the kind of basic healthcare services that they provide. And it's actually very little of it's in the United States. It's mostly outside of the United States. So there's some very good steady growth. The company's incredibly well managed. I mean, beautifully managed. And like a lot of healthcare stocks right now, it's come under a lot of pressure, and it's really just sitting there. 9 times earnings. I haven't seen this stock at 9 times earnings 5 years.
All right, so at 9 times earnings, some new money into for Sentinel?
I think, yeah. It may, again, I don't expect it to turn around tomorrow, but I think that if you're buying at this price and you're looking back several years from now, you'll be very happy.
All right, I want to thank you very much. Very happy to have you with us.
Great.
Thank you very much.
You.
Kate Schapiro coming in from Sentinel Asset Management.